everybody, it's Jinx Ara with you, and in this video I'll be showing you guys how I find demand zone and supply zone. Now, previously I uploaded a video where I show how I find the market structure and how do we identify whether we have created a higher high or lower low. Now, in this video, basically what I'll be showing you is how I take my buys and how I take my sells. Now, just by using the knowledge of my previous video and this video, you guys can make a pretty profitable strategy out of it. Now there are additional confluences as well, which you'll need to add up, and eventually I'll upload those videos as well. But let's just get started with supply and demand for now. So how do we know that a demand zone is created? Now, when the price is moving up, it creates a higher high, it creates a higher low, it breaks the structure to create a higher high, it comes back to a certain level, and that level is what we call a demand zone. Now, consider that a demand zone is an area in the market from which you'll only look for buys, and supply zone is an area in the market from which you will only look for sells. So, what happens in an uptrend market is that price comes back to a discounted level and it starts running back up. And what happens in a downtrend market is that price moves down and comes back to a premium level for the price to move further down. Now, let me give you a brief explanation of how supply and demand works. So, basically, what happens in the market is that it's the banks that move the market, it's not us. We don't do that. No retail trader can move a market, but the banks and institution are the one who does that. Now what happens is basically, now if a bank needs to take 100 lot of a certain currency, all right, they divide their lots into two sizes. It could be, a 50-50 lot. And for example, this is the area in which the bank decided, all right, from this area we'll just buy the currency, and the price shoots up. Now what the bank wants better rate, so the price comes back to that demand zone so that they can place their other 50 lot order from this area, and it goes back up. Now I don't know what lot size they take or what it is, I'm just giving an example. All right, now in the downward moving market, the the bank wants to sell at a premium price. The price starts falling down, but the bank wants a better rate to sell at. So the price comes back to that supply zone and the price starts falling down again. So now I'll give you a real life example on how you can find a demand zone or either a supply zone. Uh, so let's get on the live charts. Alright, these are some of the markings that I had done for the trade that I took on AUD USD. But I'll give you an example of how I do that. Let's go back in time. Let's go somewhere around, yeah, let's stay in 2022 itself. And yeah, we'll go in this area. Let's get on 15 minutes. Alright, now we'll be finding a supply zone or demand zone only on 15 minutes time frame in this video. Now you can find your supply and demand zone on any time frame. All right, it can be 5 minutes, it can be 1 hour, it can be 4 hour. It doesn't matter because structure is structure. So as long as you know how to look at the market structure, you can find your supply and demand zone pretty easily. So now this was the area in the market where the price was consolidating. All right, this is the area where we were consolidating, and then you see the overall trend of the market is down. Okay, we consolidated for a while. All right, and then we started moving down again. So once we started moving down again, we can identify this was the area in the market where the structure was broken, and we call this as break of structure to the down. All right, now how do we find a supply zone in this? Now you can see the whole move over here. So where did the move start from? The move started all the way from here. So we select our supply zone as a bullish candle before the move to the down, and that is our supply zone. and vice versa for the demand zone. We consider a previous bearish candle to the move to the upside. All right. Now this is the supply zone, and we will expect the price to come back into this area before we take our sells. And we'll be setting a sell limit somewhere over here, expecting that the price will come here, it will trigger us in, and then it will start falling. Let's just play this and see how it plays out. Okay, all right. So we have broken another structure over here. As you can see, there was another structure that was broken, and um, we broke the structure further down. All right. Now we have a supply zone already over here, but what happens is once we break another structure, all right, you can see this low was broken, we will have another supply zone somewhere over here, because this is where uh, the the whole move started off. So we will mark this area, all right, as our supply zone. Okay, because this is the area from where the price started moving down. So we'll consider this bullish candle before the move to the down, and let's just see how the price plays out. Well, again, we'll be setting our sell limit somewhere over here. Okay, so we are triggered into this trade already. Okay, we will keep our stop loss above our supply zone and target for at least 1 is to 5. Okay, as our TP hit, not yet. Okay, so as you can see that we took a sell off of the supply zone. Now you could actually refine an entry, all right, to this just this bullish candle, and we would still get an entry with a higher risk to reward, all right. But we should at least target 1 is to 5 no matter what, and that will give us pretty profitable. It will keep us profitable in the long run. So it doesn't mean that every single time you're going to get tapped in, all right, like what just happened over here. We just missed it completely. We broke another structure, but we came back to a certain level from which we could take a sell off. So if you guys are patient enough, you'll always find an entry, and you can be profitable. Now, there is no strategy that will work 100% of the time, all right. It's risk to reward ratio which will keep you profitable in long run. So for example, if you have taken 10 trades and you are successful 50% of the time, all right, you will be profitable with this strategy, because your risk to reward is pretty high. It's at least 1 is to 5. So in that way you'll actually make a lot of money in long run, and all it takes is to be patient and take only the high probable setups. Now in my future videos I'll be showing you guys how you can add up confluences to know which supply zone to take, and just overall a general idea of which setup is more probable than the another. So consider subscribing, leaving a like if you like my content, so I can make more videos. And thanks for watching. Take care.